Hey guys, it's Will here. I'm going to go through the markets and talk about various aspects of it. So on this chart page, I've got the markets, kind of the main markets here that I look at, and the VIX as well. So if we look at the VIX, which is the volatility index, you can see that there's a bit of a downtrend here, but you also see momentum rising, and so sometimes there's a divergence, but this isn't diverging from this one, but if we start to see this get up here, we get these little things, but a lot of these are short-lived spikes. But this parallels so some of the things you should look at, like in the macro world sort of thing, is the dollar in the US. If we look at that, when you have these downtrends here in the dollar, you'll see the markets rally a lot of times on crypto and stuff like that. So we've had a few days of down dollar index, movement, and we're getting close to this 50, which has been a support point. Like when this hit the 50, it turned around and crossed back up again, and this one crossed up again as well. So I like to look at the price percent oscillator or MACD for like a crossover, ideally like lower, close to zero somewhere, is usually better gains in that sense. But so when you look at that and then you compare that to like the NASDAQ, you'll see how it's gone up. It's when it's kind of the opposite of what I just showed you. And so right now, like the tricky part with today is there's a CPI, which is the inflation reading, coming out in about 15 minutes from the time I'm doing this video. And it can go up or down. Obviously, there's a chance inflation will go down because of the lowering of gas prices. But, over time, I think if inflation stays higher, they're going to have to keep raising rates. So, a lot of things will break when you raise rates. There's a lot of government debt and corporate debt and stuff like that. So, there's different opinions about what can be done and what's going to happen. But there's a lot of people that think that inflation will last longer and be higher than, not like going higher than it is now per se, but staying in an elevated amount. So it's not like people, market's going to react right now if interest rates are showing a decline. I mean, if inflation goes down a little bit, the market will rally, I'm sure. But then over time, people realize that, if it's not going down to 2%, then they're going to have to keep the rates higher. So I think short term, there could be a bounce if the inflation is down, showing a downtrend. So you can see this morning that the NASDAQ is up 0.6 and they're all up about 0.6% right now. It's 8:15 in the Eastern time. You see there's been these little gaps as well. So, this could continue if the inflation is down, but there's some resistance, obviously, with past prices in the market, and but you can see right here that we're about to cross this momentum moving average here, which is generally a good indicator. You can have a cross like here and still pull back a few times like that, but it is another indicator that can be used as well. I don't like a lot of times when you're near the 50 or the 200. Like if you were here, it'd be good because you have a gap. You can get up to the 200. But some of these, there's some room to move to get to the 200. You can see how it pulled back there. A lot of times you'll bounce back down off the 50. But here, when you break it and then pull back, support, and you start to see that's a good entry point right there. And even though MACD crossed down here, it was, it's close to the 50 and it's still fairly low. So this is an ideal spot when you get over the 50, pull back, and then you go. And you get a gap between there and the 200-day moving average. So all these indices look pretty similar. But like if you hold a stock and there's an earnings date, it can go up or down depending on what they say in the earnings call. Even if it's better earnings or better revenues or whatever, it can go down if they say something about the next quarter. So it's a bit of a gamble when you're on those days when there's an earnings, and similarly with inflation, it's just news. It's a news event, and that can do a lot of crazy things. So sometimes it goes up, sometimes it's buy the news, sell the rumor, sell the fact. Buy the rumor, sell the fact, stuff like that. So you, like Ethereum, you buy something ahead of time. Once Ethereum does a merge, then a lot of people will dump. So you never know what's going to happen. So it's not a great time in terms of having an edge. Like with trading, and you're using indicators and sort of trends, you have an edge, potentially increased probability of your trade. But when there's news event, it's essentially like a 50-50 scenario. But there's a chance things could pump if with inflation expected in some cases to go down with some of the lowering of the gas prices. So from there, I have another tab where I have all these sectors, U.S. sectors, and we notice that silver had a bit of a pop. Now it's above the 50-day. Those are the miners, but if you look at silver, Sprott Physical Silver Trust, that's doing pretty good. In terms of popping up, you have a cross here, and there's some room to move up to the 50. There's obviously overhead resistance prior to the previous prices, but there's different ways that I sort of focus on certain stocks or ETFs, and that's to run a scan. So that runs a scan with conditions on it. So there's different things. For example, this crossover, you could just look for things that are crossing the MACD or price percent oscillator. You can look for the first green volatility stop after this red one. You can look for all sorts of things, when they cross the 50-day moving average. The other thing I've got on here is 5-day and 30-day, 90-day performances. So sometimes I like to see what's been moving strong. So I can go 5 days, for example. And then you'll rank things in terms of the last 5 days. So you'll see that technology's done really well. Whenever the markets tend to go up, the tech will outperform. So you've got ARK and the other things that are different, and obviously Bitcoin is a GBDC. Those are all sort of tech growth type responses to the market. But then you have the silver, as I mentioned, gold. These are junior gold. A little bit of a perk up over the 50-day moving average. Silver, junior miners, and then and the cloud is another one. Is cloud computing. If you want to focus on a certain sector, but if it's with this volatility, you could just focus on the overall indices, which aren't going to be as big jumps up and down. But if you decided, like you see the market is doing what you want and there's an uptrend, then you can go into specific funds and sort of drill down into certain sectors. And so when I sort these, I can see like 30 days, a little longer to see more consistent. Like Brazil, you see it'll take into account a bit more of the trend. So Brazil looks good. Like you have this cross of this downtrend here. I'm not sure if I drew that across these tops here, and then you have this, and now you're up above the 200. And the 50 days moving up. Latin America, similar kind of ETF. Biotech has done well. You can see how it's broken this big downtrend. Right now it went up above the 200, come back, tested the 50 or a little bit below, and now we're heading up there. So if all that stuff starts to go, that's one that looks like it's gonna move up over the 200, and the 50 is gonna cross pretty soon as well. And you've got this cross, like I mentioned earlier, a cross at zero is a nice. When you're above zero, you tend to have above 50-day moving average and strong movements. Some of the ones that cross down lower in the price percent oscillator don't tend to sustain themselves. So it's more when you get up above this 0 and 50 day. I think that's all I'm going to say. If you want to get TC2000, which is what I'm using here, check out the link in the description below. You can get a free trial or $25 off your purchase. And this is what I use. I love this program. So talk to you guys in the next video.